Good morning, everybody, and welcome to the Trade Talk podcast. On Tuesday, the market finally came down with the support of the broader market. The sectors other than technology closed in the negative territory. The Nifty was at 18,604. However, it closed at 18,419 at the lowest point of the day. On a daily basis, the market closed at the lowest level of the previous day after a continuous run-up of nearly 12 days. During the same period, the market increased by 1150 points. However, the market must have taken a breather as the run-up was overextended. Technically, the market is going to find support between 18,400 18,350 levels based on extensions and retracements. However, it is advisable to buy with a reversal or reversal formation after hitting important support areas. We can keep stop loss at 18,300 for holding any long positions that if we created between the levels of 18,400 18,350 levels. On the higher side, resistance exists at 18,500 and 550 levels. Contra buying is advisable in case if we see the market is opening down and falling to the levels of 18,250. So there we should look for taking a contra bet of going long with a stop loss at 18,100 on the downside. On the higher side, contra selling is advisable. For that, we need levels of 18,550 because then we can keep a very nearby stop loss at 18,630 levels based on cash levels. For investors, our advice is to keep the strategy of buying on dip because the broader trend of the market is still bullish, and at important support areas, certainly we should look for adding quality companies with decent upside. Yes, certainly we should look for reducing weak long positions at important resistance areas, or we should take profit on those investments where we are making windfall gains like DMart or IRCTC, where we saw abnormal rally in the short term. FIs have reduced long positions and they have added put options, but also they have added index futures. What it means? It means that they are expecting range bound activity with a limited upside, and currently the market is nearer to its important support area. So they must have added long positions towards the end of the session. Globally, equity markets are exhibiting terrible strength, and most of them except Hang Seng returning back to their previous highs. Dow is 200 points away and S&P is just 25 points away from its previous all-time highest level. Bond yield is surging, which is a cause of concern for our markets, and it will minimize inflows for emerging markets. The focus should be on financials and mid-cap technology stocks along with selective metal companies. We are specifically bullish on stocks like ICICI Bank, Bank of Baroda, as well as State Bank from the financial space. From the mid-cap technology space, we are going to focus on a few stocks like OFSS, Coforge, HCL Technologies, as well as Mindtree. On the metal side, we are going to keep a close watch on Nalco, Hindalco, as well as we like Jindal Steel and Power and Steel Authority to trade if they are available at their important support areas. Friends, that's all from my side for the day. With this, I am ending today's morning podcast. Thank you very much for listening in and have a great day to all of you.